people shouldn't be surprised. I mean, in terms of gold, one day last week, 7,560 gold kilo bars were delivered out. Who the hell has $571 million to spend on gold? Who's going to buy 243 million ounces and deliver them off and then have them sent to Hong Kong? Well, those bars, I guarantee you, are being taken to the Shanghai Gold Exchange, and this is how countries like Iran and Russia are sidestepping sanctions.
According to Andy Schectman, silver is in high demand in the East, particularly in China, where ETFs are experiencing surges that are triggering circuit breakers. Western interest is masked by this demand. Schectman predicts increased Western interest, possibly around elections. Gold prices have fallen while silver prices have stabilized or increased, suggesting a disconnect between the two metals. Keep watching this informative video to find out more about what Andy Schectman says about gold and silver prices.
It just seems to me that gold is taking a little bit of a breather, but the demand for silver, regardless of the manipulation on COMEX, is really very, very strong. And I think you're seeing on a global trend, silver finally finding a bid. And there are a lot of transactions that we aren't privy to that are happening. You know, how does India accumulate 500 million ounces of silver over the last 2.5 years? And so I think that silver, you know, the rumor is that China, because gold is becoming difficult to get for immediate delivery, and they're selling out of gold so rapidly there, that they've called upon their citizens to make a shift into silver. Maybe it's the retail demand around the world and the investment demand around the world that is hidden to us here as, you know, it's very interesting on a broader scale. If you look at the ETF outflows, they're falling at a 45-degree angle. And yet gold and silver have continued to do very well. Silver holding its own and having these rallies, and overall gold holding its own and in an uptrend. But this all in the face of little to no Western participation, a lot of selling, or the public has been selling at these levels, whether because they need it or because they've waited for so long and are just capitulating, where we're seeing positive real yields on the treasury market, even, you know, whether or not you believe the numbers out of the CPI, that's in this, you know, that, or out of the Bureau of Labor Statistics on the CPI, that's irrelevant. Let's just take them at face value. We have a strong dollar, positive real yields, and lack of participation in the West, and yet the price is either stable or going higher on a ongoing basis. Day to day, that'll have variability, but that to me shows that there's a lot of demand elsewhere that we're not seeing, and I think some of it is participation in the East, where the rumors are that the ETFs in China are flush with so much demand that they keep triggering the breakers and have to stop by going up so fast. We still see the arbitrage going on. I looked at the Shanghai price today, and it's $3. It's over $30 again today in China. So there's demand across the globe that I think is really masking that maybe the lack of demand here in the West, and making people say, well, how is this happening? How is it continuing to go up when the public isn't really participating? And I think it's really a very bullish signal. It's also a very, it's a signal that I think is a massive contrarian indicator that when we see the public wake up, and I don't know what it is that makes people wake up, but every day we get closer to hopefully an election, I think there's going to be something that wakes people up. I think the potential is crazy. It's really very, very strong. But yes, I have noticed that gold has been down, and usually the days that it's been down, the last few, it's down 20 or 30 or $40, and yet silver is either up or just barely down, and that's very unusual. It is decoupling, and we've seen a lot of decoupling lately. Just the price of gold and silver decoupling against the positive positive real yields, against a strong dollar, and against outflows out of the ETFs. We go back to 2013 and look at the ETF correlation. If it would go up or down, that would be what the price was doing. Not happening right now. So again, these are all actually bullish indicators if you look at them the right way, for, I think, much higher prices in the future. Look, if you look right now, Chris, between the Shanghai Gold Exchange, and that's a cash and carry market, you pay, you get, you leave with your gold and silver. or the Shanghai Futures Exchange. Their combined daily volume over the past 2 months has increased more than 200% and now exceeds the average trading volume of the COMEX. And it effectively makes the Shanghai Metals Exchange the second largest and most influential market on the planet next to the LBMA. And we've seen a tremendous amount of exchange for delivery where contracts are bought in the West and delivered in the East. And they coincide very often with a smashing of the price, like gold today. They knock the shit out of it, then they buy contracts and they exchange for delivery. And it's interesting because we've seen a tremendous amount of volume go to Brinks Hong Kong. Now, there is a Brinks Hong Kong vault that is part of COMEX and the theory behind it. And there are guys online right now who are saying they assume that it is HSBC either working on behalf of a client or their house account that is knocking down the paper price on one hand, buying contracts and exchanging for delivery, and they go through the OTC market over the counter to Brinks Hong Kong, where trucks meet them, pick up the metal, and deliver them to the Shanghai Gold Exchange. The West is falling prey to their own manipulation, and the East is using it against us. So when you realize the demand in Shanghai has actually overtaken the COMEX, people shouldn't be surprised. I mean, in terms of gold, one day last week, 7,560 gold kilo bars were delivered out. Who the hell has $571 million to spend on gold? Who's going to buy 243 million ounces and deliver them off and then have them sent to Hong Kong? Well, those bars, I guarantee you, are being taken to the Shanghai Gold Exchange. And this is how countries like Iran and Russia are sidestepping sanctions. And this is how countries like India as well, they are accumulating metal at subsidized prices by shorting the paper price and taking delivery across the globe. And you take a look at the Shanghai Metals Exchange, they're offering $3 an ounce higher for silver than they are in the West. This arbitrage, the exchange for delivery, exchange for physical, and then the demand from the public in China, in India, and in the rest of the BRICS nations is enough to, I think, keep the price up. And even against the best attempts of the West to suppress it, you can only manipulate a market for an extended period of time by pushing in the direction that it is going. And these countries that are challenging the West and their markets and the ability to deliver these products at subsidized prices, in and of themselves, even a few years ago, did not have the sophistication or the money to do it, but they do now. And this is what they're doing in a methodical way, not too fast to cut off their nose, to spite their face and shut off this constant funnel of cheap subsidized metals, but just methodical enough to drain the exchanges quietly. And that's really what I think is happening. I think that's what's putting a bid underneath the price. You have huge central bank purchasing. It just came out. Look, 2023 Q1 was the biggest purchase of central bank metal ever, but it just came out that Q1 2024 surpassed it. So the central banks are not giving up, and they're buying it in a methodical fashion, not too fast to raise red flags and alarms, not too fast to crowd them out of their own aspirations, but fast enough to drain the exchanges. We'll all wake up and say, what the hell is going on? And again, I'm here is verbatim. The shortage of physical gold for immediate delivery has led the Chinese government to begin a media campaign urging citizens to purchase silver instead of gold. Demand for physical silver has already been growing strong this year as it's used to manufacture solar panels and other photovoltaic products in India, management and asset allocation strategies. Well, if that's true, and we're seeing this drive to have the Chinese accumulate silver in lieu of gold, at least in terms of the retail demand. Look, you have 1 billion people buying silver. It's going to affect the price and even affect the ability of the West to hold it down, where these naked short positions are going to be in very big trouble one day if this continues and you start to see Western participation or some sort of an event that wakes people up. So, you got Modi, Prime Minister Modi last month announced a rooftop solar scheme to benefit 10 million households, an attempt to deliver up to 300 units of free electricity each month to Core 1 homes in India. So there's a lot going on that the West is not telling us about. The media doesn't do a bad job. They do no job. And I think there's one other thing that I would throw into this, Chris, that adds kind of a little icing on top of this cake. Several African and Middle Eastern nations have begun withdrawing their gold reserves from the United States in recent months. Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia, each representing crucial regions in Africa and Middle East. Their actions are prompting questions about the future of the US dollar as the world's primary reserve currency, because all of these countries are trying to avoid sanction risk. And they don't trust us anymore. Trust is like a broken glass. You throw glass against the wall, good luck trying to put it back together. You won't. You can't once you break it. And I think that's kind of what's happening. We have exhausted a good portion of our trust, and it is being found in assets like gold, silver, and oil, which is being remonetized across the globe. It's money. And I think it is taking the place of dollars. It is taking the place of treasuries. And that is what's giving the floor underneath it. And the confusion that the mainstream analysts, the so-called smart people, say, well, how is this happening if the ETF is falling off a cliff? How is this happening with positive real yields? And how is this happening with a strong dollar? That's exactly how it's happening. Those are all three kryptonite to gold and silver, and yet they continue to do well. What happens if you take that away, where they just can't do that anymore, where the illusion of a strong dollar and positive real yields are actually exposed for what they truly are? I think it's a waiting game.
Remember, the key to successful investing lies in staying informed and adapting to market dynamics. If you enjoyed diving into the intricacies of silver demand and market trends, give this video a thumbs up and share it with your fellow investors. For more captivating insights and analysis on finance and investing, subscribe to our channel and join our community of savvy investors. Hit that notification bell so you'll be the first to know when we drop new content. Keep exploring, keep learning, and keep shining bright in the world of investing. Until next time, may your portfolios be prosperous and your investments glitter with success.